Hello friends, welcome to the monthly market review. Once again, we're going to look at March, and here we go. So March was a month of new highs for the Dow Jones, the S&P, and the NASDAQ. Equity markets were positive for the fifth month in a row. The rally was driven mostly by large and mega cap tech stocks, and we're beginning to see that broadening we've been talking about into smaller cap as well. The market was also sanguine that the Fed would deliver rate cuts later this year. We'll see. I know some economists that believe we'll have no rate cuts. If the Fed does cut rates 2 or 3 times later this year, that would be supportive for corporate earnings. And I'm thankful because earnings now need to catch up to prices. The stock market has gotten a little bit overvalued. Valuations are stretched. Some of the highest valuations we've seen in 20 years, in fact, excluding COVID. Now, the U.S. economy, it does remain on solid footing. We could see absolutely that soft landing we've been talking about. Strong job gains, improving housing activity, and of course, consumer spending, which is 70% of GDP. Recent inflation data has actually moved sideways and even slightly higher. So that's not good, but we're still very close to the Fed's target, depending on your CPI, core CPI, PCE, or core PCE. It's an alphabet soup, but just remember, we're getting close. The bottom line, the equity market is strong and having a very strong start to the year. That increases the likelihood of some volatility. We typically experience 3 or 4 pullbacks of 5% each year and one 10 to 15% correction every single year. And remember, since last September 2023, we have not had a pullback. So we are expecting one. Don't be nervous. Our long-term outlook absolutely remains positive. So thank you as always for your trust and your confidence in tuning in and watching this video. I appreciate it, and reach out anytime with questions.